G'day everyone, welcome to the weekend general update for global markets. And just in the last couple of days we've seen the volatility pick up in the US. We had a significant down day on Thursday and then an immediate bounce back on Friday. So we are starting to see a bit more volatility, which is typical of top formations. So I'm still of the view that we're going to get a correction at some stage in the next week or two, but given what happened on Friday night, we might just have a little bit more upside yet in the US market. So let's have a look at the summary for the week. The S&P index ended up rising 3 points on the week, but as we'll see, it's forming out a tightening triangle. So the index back to all-time highs. As I said, more volatility to finish the week. And there's definitely a pattern there which is often indicative of a market top. Also too, as I pointed out last week, the broader market, the Russell 2000 of small and mid-cap stocks is showing some signs of relative weakness relative to the Dow Jones and the S&P index. And I'm still expecting to see at some stage, it might be delayed for another week or so, but a 50 to 150 point correction in the US market I think is still a relatively high probability. So I would still be a little bit cautious about being 100% in the market at the moment. So let's take a look at that chart of the S&P. So if we pan right back, you can see we've had a pretty good trend going on. It's really still happening. If you look at the red 150-day moving average, it's still going up at a pretty good angle. The index itself is still comfortably above that, so there's no real definitive indication that this has rolled over yet. However, you will notice that we have got this tightening triangle, or this wedge shape that's occurring. You can see the bigger ranges we saw on Thursday and then on Friday, so that increase in volatility, hadn't seen that for a while. And we may just push up a little bit higher, could run for a bit further yet, could even get one final last little burst out of this wedge pattern, but I still think there's a pretty good probability that we'll see at least a couple of weeks of retracement in the S&P. Let's have a look at the broader Russell 2000 index. Now, where the S&P is right on its all-time highs, the Russell just a little bit lower. It's not a big deal, but it's just, relatively speaking, it's just a little bit weaker than the Dow and the S&P. So could well be that the general stock market is just running out of a little bit of buying support at the moment. Now I'll just have a look at this is the 30-year American Treasury bond, and both the American currency and the bond market are important for the stock market. So if we pan back and have a look, the bond yield is sitting at the moment around about 3.85. There's a bit of a line in the sand around about 5%. If this American 30-year bond yield, which is really determining the mortgage rates in America, if that were to push up above 5%, then I think that is highly significant for a number of reasons. It creates all sorts of problems for the Fed, as well as, of course, pushing up mortgage rates, which would impact the housing market, which is just so important to the American economy at the moment. So certainly that's one to keep an eye on. Also want to have a look at the US dollar, and the bounce we're getting I think is more technical than anything else. You can see there was very clear support at around 79 on the US dollar index, and we're getting a bounce back off that. That's pretty normal. I wouldn't expect it to go anything higher than 84 mark, so I think that's purely a technical bounce. I don't think there's any change in trend there, so that's another key one to look at. So US dollar strengthening, I don't think that's going to go too far, but certainly the bond market yields are rising again in expectation of the Fed starting to taper again. Now, as I've said on a number of occasions, I just don't believe it's ever going to happen. They're between a rock and a hard place, but nevertheless the market has some expectation, and that's why bond yields are rising. So it's all just a matter of how far it's going to go. Now, turning to the Australian market, our index declined by 11 points on the week. The top 10 or 20 stocks are doing okay. You know, the banks are good. BHP is bouncing back. Rio's doing okay. Telstra's near its all-time highs. So the top stocks are still right up there. They're not value. They're not attractive by any stretch of the imagination. But outside of that, there's quite a bit of weakness in the Australian market, and there's also quite a lack of liquidity as well, and that's really preventing our market from getting out of its own way at the moment. So don't be caught out just looking at the index figure that you see on TV, because it's really not representative of what's going on in the market. So just for the record, this is the ASX 200. You can see it's really been flatlining it now for about 8 trading sessions. But if we look at the Small Ordinaries Index in Australia, it's just down a little bit. So it's a similar kind of pattern to America, where the smaller and mid-cap stocks are just a bit off their highs, whereas the main index is not. Now, turning to, importantly, gold. Gold fell by $28 on the week. We've been tracking this now for a long time, and it really is looking a bit ordinary again, I have to say. I think we can get a final thrust to the downside. I believe that could be underway. But interestingly, gold stocks rose a little bit on Friday night. It wasn't much, but compared to the way that gold fell, it was actually a pretty good performance. Copper was steady at $3.25, and oil was steady at 95 as well. So not much change in those other commodities, and considering the US dollar went up, that's a pretty reasonable performance on the day. And that's the spot copper chart. It's just locked in this band between 320 and 330. So let's have a look at gold. So here we are with the gold chart. You can see since it rolled over, the 150-day moving average, the red line, is in relatively steep decline. The gold price has tried a couple of times to break through it, hasn't been able to do so. We were in a downtrending channel. We broke out of that on the 17th of October. Looked more promising. We broke to a slightly new higher high on a short-term basis, but once again that has failed. And I think there's a very good chance now that we could get a run down here at under 1200 again. Now, turning to the GDX index, it's really a big bottoming pattern, and it doesn't look quite as negative as gold does. Not a lot in it, but it's just not quite as negative. It's a bit more of a basing pattern. And if we actually look at a spread chart, which is the GDX index divided by the price of gold, so we want to see this index start to move to the upside. We want to start to see gold stocks outperform gold itself, which is always a good precursor. And again, we don't really have anything much there yet, but it is basing, and I think we're probably not too far away on getting to that point. So keep your eye on the gold market. I think eventually we'll have a pretty good run with gold stocks, but we're not there yet. So from an overall strategy point of view, short-term correction still has to be a high probability from my perspective. It will be a great setup for trading the really good stocks. I'd be careful about being in any rubbish at the moment. So we should still see a really good run through to, I reckon, around about April or possibly even May next year. I expect that we'll see probably a final washout in gold stocks. We might get one final leg down, and then if you see gold going down and gold stocks going up, then you know that we're probably there. So that's it for this week. As I've indicated on many occasions, very happy to chat with anyone that's interested in finding out more about how you can make money consistently from the market using methods that are proven. And if anyone wants to get in touch with me, there's my email address. Please feel free to do so. That's it for this week. Cheers.